Millions lost their homes overnight. Financial institutions crumbled and panic filled the air. Trust in the economy shattered. But this wasn't just a tragedy. It was a scandal unfolding right before our eyes. What really happened during the subprime mortgage crisis? Behind the scenes, major banks were leveraging risky loans in secret, with the public blissfully unaware of the impending disaster lurking just beneath the surface. It was a game of deceit and misrepresentation. Nobody knew how dangerous this would truly become. Investigative reports began surfacing, revealing a staggering truth. Many loans were based on falsified income declarations. The whispers of deceit grew louder within the finance community, but the general public remained oblivious, blissfully unaware of the storm brewing right above their heads. As Wall Street executives doubled down on subprime lending, they ignored early warning signs that could have saved countless families from devastation. They were riding the wave of profit, and accountability seemed non-existent. But should someone have stepped in? Should a single warning light have raised suspicions? Then the first major bank collapsed. Regulators dismissed it as an isolated incident, a mere hiccup in an otherwise booming market. The prevailing sentiment echoed, "It can't happen to us." But what should have been a wake-up call was brushed aside, and the real damage was only beginning. As families faced foreclosure, public outrage began to simmer. The media picked up on the heartbreaking stories of ordinary citizens trapped in a nightmare, their dreams crushed as financial institutions continued to play the system. The deeper this crisis dug, the more ordinary people were left to bear the brunt of financial catastrophe. Then came the major reveal, a leaked memo that shook the very foundations of public trust. Bank executives had known the risks, yet intentionally misled investors. The breaking of trust was devastating, and it marked a turning point in the crisis. Suddenly, panic spread like wildfire. The stock market crashed, triggering an avalanche of fear that swept across the nation. Banks tightened their grips, denying credit, and leaving countless businesses to falter under the financial strain. The collapse was accelerating, and families were left in its wake, reeling from the damage. As the dust settled, entire cities were forever changed. Job losses mounted. Communities fractured into shadows of their former selves. A generation had its faith in financial institutions shattered, and the emotional toll was staggering. This wasn't just numbers on a balance sheet. This was individual lives lost in an abyss of distrust and despair. The subprime mortgage crisis was more than a financial disaster. It was a lesson in the weaponization of public trust. The consequences were irreversible, and the damage spread far beyond the original event. People paid a dire price, and the scandal changed the landscape of personal finance forever.